Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the quarterly earnings of a brokerage company, which is well known not only in America but across the world. It is one of the leading service providers for the investors. It offers excellent brokerage services platforms and it has gained and profited from recent stock market rally, and this rally has not only boosted the prices of its assets under management but has also driven the interest of the new investors that has resulted in the influx of investors and their money. So the company is doing well sequentially, but it is yet to catch up with its levels year back. So we have growth. It is slowly and steadily inching higher. Of course, it could have gone up much more. That is a relative question, but it is doing well, and we have to look at its comparative performance both year on year as well as quarter on quarter to determine where it stands and how its fundamentals, the business prospects are shaping up, and what we can do about it to profit from this current momentum, which is increasingly looking bullish, and we can indeed find some opportunities to trade and profit from it. So first thing first, we will take a close look on its earnings report. We will be going through key highlights. I won't be able to take you through all the points listed in the report. For that, you can easily access this earnings report on the investor relations page of the Charles Schwab, and from there you can go to the report and delve onto the details and figure out the business prospects. Here, my job is to make you aware of some key developments as these have been listed in the earnings report, and afterwards we will also see its charting to see where it stands in comparative terms, as I said in introductory remarks as well. Because for us, that is the end goal. That's what we are trying to do. If there are opportunities in the market, we indeed want to profit, and for that, we need a strategy backed by the fundamentals. So that is the primary objective here. As the company has listed, there has been growth in sequential terms. The new assets, the inflow of the new assets, particularly in the March, has been quite solid. Now, its total assets under management have reached a record level of $9.1 trillion, which is showing a growth of 20% year on year. The profitability is also on the rise. Its revenue still is below its levels a year back, but as I said, the revenues are going up in sequential term, in quarter on quarter terms, and maybe after these revenues which have failed to reach higher levels in year-on-year term in the second half of this year, it's of course on track to top the year-on-year earnings as well, because the base will be much lower. Earlier, for last few quarters, the base was quite high, and that is going to change. So in next few quarters, we will have year-on-year as well as quarter-on-quarter growth figures. The macroeconomic environment has gotten better in last few quarters. We have seen a solid rally in the equities in the United States and across the world, and that has fueled the valuations of the investors' holdings. That has also brought in and attracted newer clients. There has been onboarding of more than a million new clients for this company, and along with this onboarding comes in the money. So that has been a win-win situation for the Charles Schwab. We will now look at this income statement. Here it comes. There is a consolidated statement of income. If you look at the revenues, net revenues, total net revenues, here we have this decline of around, I guess, it is 7 to 8% revenue decline year on year. And at the same time, if you compare these figures, net profit is also on the lower side. The net income, you can see, is also lower. And the interesting thing is the decline in net profit in percentage terms is higher than the decline in the net revenue. That means the company's efficiency has been lower. But then you also have to keep in mind one key fact that the companies have fixed cost and variable cost, and fixed cost usually stays the same, whereas the variable cost, as the name suggests, keeps varying with operations. This time, what might have happened is the fixed cost is not going to change. Of course, the variable cost might have come down. So proportionately, there was reduction in the expenses, but because of the no changes in the fixed cost, the amount of decline in the expenses was lot lower than the amount of decline we have observed in the total net revenues, and that explains this drop of more percentage point in the net income in comparison to the drop in total net revenues. Still, the profit level is quite good. Any company which is making more than $1 billion in quarterly earnings is a valuable company. The question is always whether it is going to sustain or not, and I see no reason for the Charles Schwab to be not able to sustain these earnings. It is well poised for further growth. Not only it's likely to sustain these earnings level, but also to gain ground. And in the second half of this year, we are likely to see it top these 1.5 billion mark as well in net income, and that's what investors are waiting on. Its share price has been continually going up for last few months, and I don't see any reason for that to change in coming months as well. So now we head to the JForex platform, which is going to help us figure out the charting pattern for the Charles Schwab. It has been in a extended consolidation for last couple of weeks. Here you can see that its range have been quite narrow, and after making a low around 70, it has again started to rally higher, and it's slowly going up and up. That has been its key determining feature for last couple of quarters, you can say, since the sharp drop we observed in the March of last year. It has found support on the lower levels, and from there on it has bounced back. Now if we consider these earnings and the stock price movement of the Charles Schwab, one thing is sure that in recent quarter the company has been doing well. Its earnings have been growing in sequential terms, so has been its stock price. And as I said, I see no reason for it to not make more than a $1.5 billion in net profit in the second half of this year. So, keeping that possibility in mind, there is room for it to appreciate further. And the question is, what is the price level which is going to offer us optimum entries from the risk reward perspective? And for that, we will have to use different time frames for defining the trading duration. If your view is just for a couple of sessions, just for a couple of days, then I think using a hourly candlestick time frame is quite a good idea. Here, the momentum is on the bullish side. That means adopting a buy on dips approach is going to be helpful. Then the question arises, what kind of dip which is going to help us, and when it is likely to occur. For that, I think some patience is advisable, and we can look at prior consolidation phase highs. Here you can see that this was the recent swing high till it was topped and then subsequently made a consolidation low level. So for next few sessions as well, watch out these prior swing high price range of around US $73 to 74 per share. And if there is no substantial decline below this price level in the next few sessions, and it keeps consolidating with positive momentum, then of course in course of time we can go for a new long trade while expecting it to move beyond this immediate swing high of 75. Maybe in course of time it's likely to inch towards 80 as well, and that possibility can be better exploited by using medium term time frame, where we can use daily candlestick time frame. In it also, the momentum has been on the side of the bulls for last few months, and that's not really likely to change anytime soon. The price formation as it stands looks quite helpful for the long trade, but I don't think that there is a optimum entry point at the current valuation, because we are going to use a buy and dips approach. That means here we will have to wait for some correction and then consolidation, which will allow us to define price levels to see if there have been support on those levels for the Charles Schwab share price, and if it is showing the signs of new buying interest, of course we can go for newer long trade on those levels. So for that, two requirements are there, the developments which need to happen before we get any kind of new trading opportunity. The current price level is not really going to offer us optimum trade entry point. So for that, you will have to adopt a wait and watch approach, and maybe in course of time or next few weeks we might see some correction happening on these higher levels, and if it finds support anywhere close to or above this immediate swing low of 65 to 66, we will be in a position to capitalize on these corrective moves, and in course of time after it stabilizes on those lower levels, we can even go for a new long trade, but that's going to be a question of time, and that means we will have to wait and watch. The longer time frame price formation is also showing the signs of continuous upward bullish momentum, and here it is pretty much on track to reach the price levels observed in the first quarter of fiscal year 2023. And looking at the price formation over last few days, I feel that we can profit from the long trade, but on the current levels, I don't really see us getting a optimum trade, because if there is consolidation, extended consolidation on the current levels, then of course we won't be making any money, and if it goes in a declining phase from the current levels, then we will end up losing money. The only scenario where we profit for going long at the current juncture is if it continues to grow, and as we have seen that its revenues are yet to top its levels of a year back. That means there is no strong reason for it to jump higher immediately, and that gives us time. Maybe we should wait for next correction over next few months, and if there is correction and the price level holds, there is no sharp decline after due consolidation, we can indeed define the entry points in such a way as to ensure that our risk reward ratio is optimal, and even in the eventuality of we getting the trade wrong, we are in a position to minimize our losses and maximize our profit if we get it right. So that's all from my side for today's session, where we discussed the quarterly earnings for the Charles Schwab, along with its price formation over last few sessions, last few weeks, and last few months. So taken together, all these different time frames are pointing to the underlying strength in the Charles Schwab's share price over different time horizons. The earnings look decent. There is scope for further improvement in the second half of this year. So taken together, all these points point to the possibility of continuing bull run, and I would advise to try to profit from that depending on the time horizon of your choice. Now it's time for me to sign off for the day. I will be back tomorrow with a equally interesting company to explore and exploit for our advantage. Now I'm saying goodbye. See you next time around. Till then, goodbye.